Morning, Jameel. So the budget deficit over GDP of 3.1% has been targeted for 2016. And since then, the ringgit has barely moved. What's your outlook for the ringgit as a result of this budget?
Thank you very much for having me. Now, basically, I always thought that the budget release itself would have quite a limited impact on the ringgit unless there's some sort of swerve when it comes to investor confidence. Now, what I would say is this budget, there's arguments that it's lower than expected. So what it shows is that something that we've been pointing out continually in our market reports recently when it comes to the ringgit is that the economy is going to start to suffer from less purchasing power, basically just because its own currency has depreciated so dramatically over the past year.
If you look at some of the developments in the commodities sector, I mean, we see that oil prices as well as palm oil prices, except for its recent performance, have not done very well. But recently they started bouncing up again. Do you think this will have an impact on the ringgit as well?
I think that any bounce in commodity prices is supportive towards the ringgit. However, really what would be beneficial towards the ringgit and other commodity-linked currencies will just be consistencies when it comes to the oil price. Like there's optimism when the oil prices rally in towards $50, but if this is not long-term and the oil prices then drop to $44, which has happened in the past 2 weeks, this is basically going to reverse any momentum. So consistency is the key.
Now, the other ASEAN economies are obviously in different kinds of trajectory, but lumped into the same emerging market, a basket. Where do you see ASEAN currencies going?
I think that the emerging market currency weakness, one thing that I've been saying is that it's a global phenomenon. It's not just impacting the Malaysian ringgit. It's spread into the Indian rupee, the Indonesian rupiah, even more developed emerging markets such as the Russian ruble and the Turkish lira have suffered astonishing weakness as well this year. To be honest, if these currencies, and even more specifically around the Asian region, were going to rally further, you need the sentiment towards the emerging markets to improve and some stability when it comes to the China markets as well.
Now, China recently announced some easings, and the BOG is also mulling about doing the same thing. Of course, this adds to the kind of QEs that are happening around the world, like Europe as well as the US. Do you think that there is this competitive thing going on right now about currencies and about central banks' actions?
I think that central banks are seeing that currency weakness quite globally, and perhaps they're thinking about export competitiveness and enhancing it further. But to be honest, nobody should be surprised that the People's Bank of China cut interest rates again last Friday. I mean, one thing we've been warning about now for months is that the PBOC will do whatever it takes to defend the government GDP targets, and they cut interest rates just 3 days after the GDP growth fell below target. So we're not surprised at what happened in China at the end of last week.
And where do you see the yen going?
Okay, so basically the yen, the only reason for the strength over the past couple of months was because of safe haven demand. Now, there's a lot of pressure on the Bank of Japan to ease monetary policy further because, to be honest, the Japanese economy is still struggling. It's not progressing, and there is a bias that they need to ease further to reinvigorate economic growth. But unless they do actually unleash either further QE or cut interest rates even further, it's difficult to say that the yen is going to go on the same kind of weakness run that it saw late last year.
Thank you. And that was Jameel Ahmad, VP of Corporate Development for FXTM.